Hello everybody, welcome to this class. So till now we talk about strong SNR levels. We talk about entry points. So I hope you understand these points, and today we will talk about some candles. These candles are very important in the market. So here you can see this is a bearish candle, and here we have a bullish candle. Okay, here we have a bullish candle. So now I need you to pause this video and think about this. If you see this, what will be the next candle? So this is the question. What will be the next candle? Please pause the video and think about it now. Okay, as you know, okay, let me make it a little bit thicker. Okay, as you think and as you know, the buyers are here, right? This is the buyers area. This is the level we are seeing these buyers entered in the market. And where is the sellers entry point? The sellers are here, right? This is the sellers entry point, and this candle closed here. This is closing point of this candle. So if we convert this chart, this candlestick, to a line chart, we are seeing like this. The sellers enter in the market, it reach our buyers area, and the market again go to up, and here this is the closing point. So this is the closing point, this is the sellers area, and this is the buyers area. This is the line chart, the graph chart. Okay, so this is the line chart of these candles. So we are seeing like this. So what is the more possibility? It is more possible to this candle go up, hit these sellers, and again sellers enter, and the market go down. So there is more chance to see a bearish candle like this. Okay, so it is more possibility to we see a bearish candle like this. Sometimes because of these strong buyers, sometimes we can see a bullish candle again here, but mostly we are talking about mostly we can see a bearish candle like this at this area. Okay, so if these two candle be a 30-second candle, and if we convert these charts to 1 minute, what we can see? We can see a candle like this, a red candle like this, a red candle like this. So these are the same. Let me draw it again here. Okay, this is our bearish candle, and this is our bullish candle. So as you can see, these two are same here, this one and this one. This is 1 min and this is 30-second. So these two candle make this candle at the 1 minute candle, right? This candle. So what we can know about this candle. Okay, let me clean this here. Okay, so we have this candle. So we know about this candle, we already talked about this. Okay, let me draw this red. So we know about this candle, we talk about this now. So this is the buyer's area. You can see from this level we are seeing a buyer's entry to this level. This is the seller's area, and this is the closing point. As you can see, this closing point is near to the seller's area. The buyers are here. We can expect a buyer's entry from this level. We are seeing this buyer's entry from this level. So this is the seller's area. So the psychology of this candle is the market will go down, and the name of this candle is hammer. This is the red hammer candlestick, and the psychology of this candle is the market will go down because the closing point is near to the seller's area. So the psychology of this candle is it will go down. So if we see this candle in the market and we have a resistance here, what about this? This resistance will confirm that this candle will go down for sure. So with this resistance you can place your trade confidently that this market will go down, because already we know this candle psychology is the market will go down. So with this resistance we can be sure the market will go down for sure. So if we have any resistance here, we can be more sure this candle will go down. But what about this? If we have a support level here, what about this? If there is any support level, this support level show us we already see a strong rejection from buyers, and now we have a support level here. So this support level show us the market will go up. Why? Because we already the buyers, we already see the buyers entry here, right? We already see candles like this in 30 seconds. We already see candles like this. So if we have any support level here, you can see we already have a support level here, and we already see the buyers entry. So again, if the market go down, hit this support and it will go up. So here we can expect a buyers if we have a support level at this area. So let me explain you again. This candle called hammer candle, the psychology of this candle is the market will go down, but if we have any support level here near to closing point of this candle, the market will go up. Why? Because we already see a strong rejection from buyers, and here we have a support level, so the market will go up. But if we don't have any support level here, if we don't have any support level near here, we can go with sellers. Why? Because we are seeing a buyer's entry here and a seller's entry here. This is near to the sellers, So it will continue at least like this or like this. It will continue to this buyer's area. It will hit this buyer's area if there is no any support level here. And if you have any resistance level here, it is arsenal confirmation, you will be more sure the market will go down, because this single candle will uh, with this single candle market will go down, but with a resistance level it is arsenal confirmation, and you will be more sure the market will go down. So this is the red hammer candle, and also it is true about the green hammer candle. Okay, now let me show you the green hammer. As you can see here, we have a green hammer here. The buyers are here and the sellers are here. You can see from this level sellers enter, and again buyers reject this candle to this level. So this is the closing point of this candle. So the buyers are here, the sellers are here, and this is the closing point of the candle. And you can see this closing point is near to the sellers area. The buyers are here, right? And the sellers are here. This closing point is near to this sellers area. So again, we can expect the market will go down, but if we have any support level here, we cannot expect this market go down. It will reject, and again it will go up from this level. So if we have any support level near to this closing point, we cannot think the market will go down. We just can think about this market will go up. But what about we have a resistance level here? It is a confirmation that this market will go down. Already we know this candle make the market to go down, and with this resistance we can be sure the market will go down. So these are the hammer candle, the green hammer candle and the red one. Okay, and also we have the inverted hammer candlestick or shooting star. So let's see what this candle do in the market. Okay, let me draw it. You can see this shooting star. The buyers are here, the sellers are here, and this is the closing point of the candle. You can see this closing point are near the buyers, so the market will go up. And here also the buyers are here, the sellers are here, and the closing point is here. This closing point is near to the buyers, so this candle will go up. But if we have any resistance level here, the market will go down. If we have any resistance level here, the market will go down from this level, and if we have any support level, we can be sure the market will go up. Okay, what is the next candle? The next candle is a spinning top candlestick. Okay, the next candle is a spinning top candlestick. What is this candle show us? This candle show us buyers are in the market, yes, but we can see sellers trying to dominate in the market. So at any time the sellers may enter at the market because of this rejection. You can see the market, the candle start from here, the sellers enter, again buyers reject the sellers, it go up, and again here the sellers enter at the market, and candle close here. So this VIX shows us the sellers are dominating in the market, and we can expect a seller's candle at any time. So if we have any resistance level here, we can be sure the market will go down. But what if we have a support level here? If you have a support level here, this candle shows us the buyers are in the market and the buyers are interested, and this is a buyers area, right? And we are seeing a buyer's candle, so the market will go up, and the next candle will be a bullish candle. And what about this candle? You can see the sellers in the market, but this VIX shows us the buyers are dominating, so the buyers will enter at the market at any time. So if we have any support level here, we can go with buyers surely. But what if we have a resistance level here? If we have any resistance level here, this seller shows us the sellers are in the market and the sellers are active, so the next candle will go down. So these are the spinning top candlestick, and the next candles are doji candlestick. The doji candlestick, the dragonfly candlestick, the dragonfly doji, and the gravestone. This candle shows us the buyers and sellers have equal power. The presence of the buyers and sellers are equal, so we can decide the buyers will enter or the sellers. But when you see these candles at a support level, it means the buyers will enter. Why? Because these are equal power, right? The buyers are one and the sellers are one. But when we are seeing a support level here, it means it is the buyers area, so buyers have 1 plus point and the buyers will enter in the market. So if we have any support level, the buyers will enter, and if we see any resistance level, it means this is a seller's area, and after this candle the sellers will enter at the market, and we can expect a seller's entry at the market. Okay, so now we talk about this candle. We talk about this candle, a hammer candlestick. A hammer candlestick, an inverted hammer candlestick, this is the inverted hammer or shooting star. We talk about spinning top candlestick, okay. This is the spinning top candlestick, and also we talk about the doji candlestick, the dragonfly doji, and the gravestone. So these 9 candlestick are so important in the market. This 9 candlestick and the color on these candles, there is no difference between color. The color not important. So how we can use this candle in the market? If we have a support level here, we can go with buyers. If we have a resistance level here, we can go with sellers. Also here, if we have support level, we can go with buyers. If we have a resistance level, we can trade down. If we have a support level, we can trade up. If we have a resistance level, we can trade down. If we have a support level, we can trade up, and if we have a resistance level, we can trade down. So these are the reversal candlestick at the SNR level. You can see if we have a resistance level at the top of this candle, the market will reverse, the market will go down. And if we have any support level in this area, we can go for a call, the market will go up. And if we see any of this candle at the middle of the trend, so what is the middle of the trend? If suppose the support level is here and the resistance level is here, right? This is the support level and this is the resistance level. So this market is in the middle of the trend because it is in the middle of these two level, in the middle of these two level, this resistance and this support. So if this candle be in the middle of the trend, this candle will continue the market. So in the middle of the trend, these 9 candle are continuation sign, and at the SNR level, these 9 candle are reversal sign. So you just need know this. In the middle of the trend, this candle are continuation sign, and at the SNR level, this candle will reverse the market. So let me show you some example to understand this point completely. Okay, at this picture you can see here this candle, this is a spinning top candlestick, and the support level is here, the buyers area is here, and the sellers area is here. This spinning top close in the middle of the trend, so we can expect a continuation. The market will continue this previous candle and it go down. Okay, so this is in the middle of the trend, so the market continue. Here you can see the buyers are here, the buyers are here, and there is a gap to the buyers area, and we know now this is the hammer candlestick, a continuation sign because the buyers are here. So I go for a lower option and the market go down. Again you can see a spinning top candlestick, a continuation sign, the buyers are here, it is in the middle of the trend, so it will again continue the market, and again the market go down. You can see here again the market go down. Again this is the buyers area, there is a gap still, and this is a shooting star, a inverted hammer candlestick. You can see here this candle, it is a shooting star candle or inverted hammer, so again it will continue the market, and you can see again the sellers enter. But again this is a shooting star candle, a inverted hammer, but now it is at the support level. You can see So now we can expect a buyer's entry. So this candle at the level will reverse the market. You can see here, this is a doji candle, a continuation sign in the middle of the trend. The next level is here. So this doji will continue the market, and you can see this is a bullish candle. But here, this is a green hammer candlestick at the seller's area. So this market is at the level, this hammer. So it is a reversal sign, and the market go down, and it is a bearish candle. Here you can see the level is here, the sellers are here. Here you can see this is a inverted hammer, and the next sellers are here. So it is in the middle of the trend, and the next candle is a bullish candle. Here you can see this is a round number. We talk about round numbers. We are seeing this doji at the support level, so this candle is a bullish candle, and it reversed the market. Again, we are seeing a shooting star. The next sellers are here, so this is in the middle of the trend. Again, continuation. Again, you can see here this candle, again a continuation sign. Again, it continue the market, and it is bullish candle. Here also, here you can see with horizontal line, you can't see any level properly, but we know now about trend line. And you can see this candle is now at the level. This is spinning top candlestick, so I placed the lower option, and it closed as a bearish candle. So at the level, at the horizontal line level, or at the trend line level, when you see any of these 9 candlestick at the level, it will reverse the market. And when you see any of this candle in the middle of the trend, like this one here, this green spinning top, it will continue the market. So when you saw this candle at the level, it will reverse the market. You can see here a red shooting star, a red inverted hammer, it reversed the market. Again, a spinning top candle at the level, it reversed the market. But here you can see a spinning top in the middle of the trend, the level is here, it continued the market. Here you can see a green hammer, it continued the market. But here a green spinning top at the level, it reversed the market. A doji at the level, it reversed the market. And here also you can see a spinning top candle at the support level, it reversed the market. Again, a green hammer at the resistance level, it reversed the market. And here you can see this is the resistance level, and this is the support level. This candle is middle of the trend, middle of these two level. So it continued the market, and you can see it is a bearish candle. So this red hammer, because it is in the middle of the trend, it continued the market. So this candle will help you in the market. And if you see my videos, I use this candle mostly, and this candle very help you in the market. So remember this candle every time. This candle will help you. And also let me show you some trades here with this candle on this video. If you check my videos, I trade with these candles mostly, and this candle will work very good. Here you can see I placed the higher option here. Okay, because of fast momentum I got a late entry, but if you observe here, you can see, okay, let me show you. This is the spinning top candlestick, and the next reversal point in the market is here. You can see we are seeing some reversal, so there is a gap to the next level. The buyers are here, the sellers are here, so this is in the middle of the trend and it will continue the market. And you can see this is a bullish candle. Here you can see, if you observe this market, the buyers are here and the next sellers are here, right? This candle is in the middle of these levels, but here this is a ranging market. I don't recommend you to trade on this market. You need experience to trade like this market, so it is risky. But here I place my trade because you can see the sellers are here. You can see the next sellers are here and the buyers are here. This candle is in the middle of the trend, so I place here a higher option, and you can see this candle close as a bullish candle. And here also we have a support level here, a support area, and this is a spinning top candle at the support level, so this candle will go up. But here I missed this trade because of time, so I missed this trade, and this candle goes up. Here you can see the next sellers are here. This is a uptrend, right? We know about this, and the next sellers are here. This is the resistance level, this is the support. This candle is in the middle of the trend, so the next candle will go up from this level. Okay, here you can see, so with the help of this candle you can win your trades easily. You can see here we have a support level, and we can find this candle easily in the market. You can see here a type of spinning top candle, and it reversed the market. Here you can see it is a doji type candle in the middle of the trend, so it continued the market. You can see here a shooting star, it reversed the market. Again a doji candle, it reversed the market. Again here we have a support level. Again here you can see a inverted hammer, it reversed the market. Again a inverted hammer, it reversed the market. So you can use this candle easily in the market, but I don't recommend you to trade this type of market. Okay, this type of ranging market, this is risky, so I don't recommend you to trade on this type of market here. These are the ranging market. You can see the market moving on this range, and it is not good. Okay, let me explain you what is the ranging market. The ranging market is this. You can see the market will continue in one range, so it is not good to trade on this market. Wait for a breakout, and you can see here it's break the level. And also don't trade in the consolidation area. Let me show you. Okay, here we have a consolidation area. So don't trade on this type of market. This is a consolidation area. You can see the market move just between these two lines, and sometimes in consolidation area you are seeing a red green candles. So it is dangerous. Wait for a breakout of this consolidation area. And when the market also in the future is in this area, when the market in future is this in this area, it is also dangerous. It is better to avoid. You can see here again the market fall in the consolidation area because of the previous one, because of this one. Okay, so when you are seeing a consolidation area and market again in the future come to this area, avoid this area. Don't trade, leave it, because again market, you can see again market may be in the consolidation area, and in the consolidation area you can't predict. You must wait for a breakout from above or below. So when you see a consolidation area, leave the market until the market break. Okay, so you cannot predict in the consolidation area. Okay, so let's go back to today's topic. You can use these candles easily. You can see here on this area, you can see here a spinning top at the sellers. It reversed the market. Again we have a shooting star, an inverted hammer in the middle of this trend, because the buyers are here and the sellers are here. So this is in the middle of the trend. It continue. Again we are seeing a doji candle here. This is a doji. It continue. Again here we can expect a continuation sign, but in the left it might be a level here. You must check. So the market reverse, but again you can see sometimes the market will reverse, sometimes you lose your trades. You must prepare yourself to for lose, because you cannot win every candle, every trade. So here again you can see a shooting star, a green inverted hammer, again a continuation. So this candle will help you in the market very good. And one of my students just used this point, and he just learned from my YouTube videos, and he used just this point and sent me a message. He made $100 with $50 only with this, only with hammer candles. Yes, only with hammer and shooting star, nothing else, only with these 2 points, hammer and shooting star. Only with these 2 points he made $50. He made $50 in 2 days, I think. He sent me a message. So let's go back to my first class sentence. For making money, you no need know everything, you just need know enough. So he used only this point and he made money. And if you want, I can send you his screenshot, only with these 2 candles. So it is very good, it will work. So practice this in the market. Okay, so this is about this 9 candlestick. Okay, so but we have two reversal sign, two extra reversal sign also in the market. And what is those? Let me show you here. Okay, here, this one. Let me show you this green candle. It called Marubuzu candle. The Marubuzu candle can have a, okay, let me draw clearly for you. A Marubuzu candle can be like this, or it can be like this. Okay, you can see it don't have any wicks here, and here it don't have any wicks here. So these are the shape of Marubuzu candlestick, and it is a reversal sign at the SNR like this. You can see we have a resistance level here, and this is a Marubuzu candle. You can see here we don't have any wick here. So this is a Marubuzu candle and it is a reversal sign. But in the middle of the trend we can't trust this level, we cannot. It may reverse, it may continue, so it is risky. But at the SNR level, when you see this Marubuzu candle, it is a reversal sign. And also another reversal sign in the market is the very strong and long candle like this one. This one, it is very strong candle and it is a reversal sign, but you cannot trust only this point. If you see any resistance level here, now you can trust, because this is a reversal sign, a strong candle, and we have a resistance. Now we can go with sellers. So we cannot rely only on this point. When everywhere, when you saw a strong level, you think it will reverse. No, it is wrong. You must have a resistance, and now we have two conformation, a strong candle and a resistance level. Now we can think the market may reverse. So the strong and very long candle will reverse the market mostly. You can see here another example. Sometimes you can see here, sometimes it will not reverse the market because the level also is here. So you cannot rely only on this point. The long candle are sign of reversal, while you cannot only rely on this point. You can see here it continue the market, but mostly the long candle will reverse the market. Mostly the very long candle will reverse the market. Here I'm showing you some example. Here you can see it reversed the market. So the strong candles also are reversal, sign of reversal. So now we know about our 9 candlestick, Marubuzu and the long candle. So these are the points that you should know, that 9 candlestick will reverse the market at the SNR level, and in the middle of the trend they will continue the market. So, and now let's talk about new low, new high, and let's talk about wicks. Okay, let's talk about wicks. When the wicks are important, the wicks, this one is wicks, this one, the shadow of the candle, this one is the wick. What is showing us the wick? The wick showing us where the sellers enter. If you observe this candle, it telling us the buyers go up, hit this level, and again sellers enter and the candle close here, right? This wicks is telling us. So what is mean? It means if we don't have any resistance level here, any price action in the previous market like this, if we have a price action like this, we cannot trust this one because the market may reverse again. Okay, so if we don't have any price action in the left, this wick shows us the sellers are here. So we can go with buyers until the market reach these sellers, and you can see it is reach this level, because this is, we have a level here, a price action, I already draw it. So the VIX shows us where the buyers or sellers are interested. Okay, you can see a VIX from this level, so it is showing us the sellers are here, the sellers are here, so we can go with buyers until we reach a level or until we reach this wick. Okay, so the wicks are important at the level. In the middle of the trend, you can see here on this downtrend. Okay, let me draw clearly. You can see here on this downtrend we have some wicks, but these are not important for us. But at the level, the wicks will be important. This candle is at the level, right? This candle is at the support level. So what this wick shows us? This wick shows us the buyers enter in the market, and again sellers enter from this level and close their candle here, right? So this is the buyers and this is the sellers, and you can see this candle close at the buyers. We are seeing already some buyers in this week, so this shows us the interest of the buyers. So again we can expect a buyers entry, and here we can, and here if we saw any wicks here, it also show us the buyers are interested. You can see very small wick, but show us the buyers are interested. So the wicks are important at the levels. You can see the next levels, the next level is here. So this wick is in the middle of the trend, so we can go with buyers. This wick again from this level, it shows the sellers are interested here, so we can go with buyers again. So when the market close in the level and when we saw a wick, this wick show us the sellers are interested and the market will go down. So this is the mean of the wicks. You can consider the wicks in the level. You can see here the wick. The wick show us the sellers are here. You are seeing, if you analyze this candle, just this candle, you can see the buyers enter from this level, it go up, hit this level, and now this wick shows us the sellers enter and it close here. So this wick show us the sellers are here, and we already know the buyers enter from this level. So now this candle is near to the buyers, so this candle will go up, right? But if suppose, for example, we have a resistance level here, this showing us we have a strong sellers here, because we are seeing a strong rejection. So now we must think the market will go down and the next candle will be a bearish one. Why? Because now we have a level here. Okay, so the wicks are important at the levels. So always consider that if you have any level here, this week shows us the sellers are here, so you can go with buyers. But if you have any resistance level here, this week show us the sellers reject the market very strongly and the sellers are strong, so the next candle will go down. So this is about the wicks. Now what is the new high or new low? Okay, let's talk about this. The new high or a new low, you must find the new low with compared to the previous candle. If you want see a new low on on this candle, you must consider the new low compared to this low. And if you want see the new low of this candle, you must always compare these two candles. If you want new low on this candle, you must compare the new low on this candle. Okay, so what is the new low? You can see this candle, the lower price is here, right? The lower price is here, and this candle hit this price and again go up. So now you can see this low of this candle and this low of this candle. You can see this is a low and it is lower than this low, so we call this new low. Okay, so now what about this candle? We have a new low here, so let's check. You can see the low of this candle is here. This is the low. Do you see any low on this candle? No, we cannot see. So we don't have any new low here. We don't have any new low on this candle, right? Because we are seeing only on these two candle to find the new low on this candle. So this candle must hit lower than this low in the market, and after that we can say this is the new low. If suppose this candle be like this, now we can say this is a new low. Why? Because this is lower than this low. It is low and it will call new low. But here it not happen. You can see the market just hit this level and our low is here, so there is no new low on this candle. But what about next candle? We must compare the next candle with this candle, right? These two candle. This candle is the low of this candle is here, and you can see this candle made this new low here. The market made a lower than this low, right? So this is a new low. What about this one? You can see here this low is here, but you can see this low is here, so it is not a new low. The new low must be lower than the previous low. So if you want to have a new low, you must see this. This will be new low. But here we don't have any new low. It is almost the same. This is the same in the new high. You can see here this high here, and you can see this candle made a new high. Okay, again you can see this high here, this high, and you can see this candle, it is a small, but it is also a new high. Again you can see this high here, again market made a new high. So what is this new low or new high show us? It is showing us the buyer's pressure. The new high show us the buyer's pressure. You can see here it is a high and it is new high, right? It is showing us from this level to this level, the buyers tried. The buyers go from this level to this level and made a new high here. You can see this is the previous high, and the buyers tried very strongly and made a new high. This new high shows us the sellers are here. If we don't have any resistance, and you can see now, we know the resistance is here, but if we don't have any resistance here, here, or here, if we don't have any resistance, we can consider this new high, right? So this new high shows us the buyers are from this level to this level, and now the sellers enter. So this new high shows us the buyers are strong, and we can go with the buyers. And also about the new low, you can see the sellers enter and made a new low here, and again buyers enter from this level. So buyers are here, enter from this level, and made this bullish candle. But there is a new low in the market. It shows us the sellers are here, and the sellers go to this level, and buyers enter from this level. So if we don't have any support level here, we can consider that the sellers are strong, and the sellers again will go down. So it is about new low and new high. It is showing us the buyers are changing their entry point. You can see here, let me show you on this peak. You can see here, first time the buyers was here, from this level they enter. Again this candle made a new low, so now the buyers change from this level to this level. So this is showing us the buyers now are here. So you can see now we can expect the buyers, because from this level you can see a rejection. So now we can expect the buyers, because this is also a support level. Even the market made a new low, we must expect buyers, because this is a support level. I told you the new low will work only if we don't have any support. If suppose the support be here, this new low again shows us the sellers are in the market, and we can go for a continuation. So this is about new high and new low in the market, and also about VIX. So now we wanna talk about momentum. So already we talked about the 9 candlestick. We talk about Marbuzu. We talk about strong candles or sign of reversal. We talk about VIX, and we talk about new high. You can see here it is a new high, because with compared to this high it is higher. It is a new high because compared to this high it is higher. And here also it is a new low, because compared to this low it is lower. So this was things we talk about. So now let's talk about momentum. What is the momentum? When you saw a 3 candle with the same color, the momentum will start. So when you see 3 bullish candle, now we can say this is a bullish momentum. This is a bullish momentum, because we are seeing 3 bullish candle. When we are seeing 3 bearish candle, now we can say this is a bearish momentum. But sometimes you can see here, this is a good example, you can see sometimes the market is making these beautiful red candles, and you think about this, how we can identify this movement in the market, and with following this you can make so much profit. It is very good to make money with following this, right? But how can you know when the market is here? When the market is here, how you can know this will happen in the market, the remaining of this bearish candle? It is the momentum tips. So let's talk about this. When you saw a momentum in the left of the market in the past, when you saw a momentum, you can expect the same momentum in the right. Okay? So when you are here in the live market and you are seeing a momentum in the left, you can expect again a momentum, the same momentum in the right. What is my mean? You can see the momentum start from here, and the bullish momentum end here. So now you are here. So you can see a bullish momentum in the left. So now we can expect a bearish momentum in the right. Okay, and you can see the bearish momentum start, and you can continuously go with the sellers until you see a weak candle at the level the previous momentum start, or until you see a breakout candle, and after the breakout the buyers will again enter. Mostly this is the psychology about momentum. Okay, so this is the point. When you saw a momentum start from any level and end from any level, and again you are seeing the sellers are enter strongly, you can expect the momentum continue the same momentum in the past. So you can see, you can expect the momentum continue, and you can expect the momentum until reach the level momentum start, or the or break the level. So if you see any weakness in the sellers, you can expect a reversal. But if you don't see, if you see still there is a strong candle and close at the level, you can expect a breakout, and the next candle will break the level. After the breakout you can expect a buyer's entry. Okay, so if you see a weak candle here, you can expect a reversal. But if you see a strong candle close at the level, you can expect a breakout, because the market is copy this momentum. So in the momentum trade, this continuation candle will help you. Those 9 candle you can see here, a hammer candle continuation, a shooting star continuation, again a spinning top, a continuation. So this continuation candle will help you in the momentum. You can see is spinning top, it continue. So in the momentum trade, this candle will help you to place your trade with confidence. So you can use this trade also in momentum trading. And you can see here, sometimes you can see here the momentum start here, the momentum start from this level and it end here, the bullish momentum. Sometimes you may see this ranging in the market, and when the market break this ranging, again this momentum will copy here at the right. Okay, So it is not like last picture always. Sometimes you can see this type, the momentum end and the next momentum will start directly, but sometimes you can see this type of market. The momentum end, you may see some ranging market, and when the ranging market break with these strong sellers, again this momentum will start here, this momentum will repeat here. Okay, so it is not always like the last picture. It is not always the market made a bullish momentum and again exactly we see again the bearish momentum like the previous candle. This type may also happen. You can see a bullish momentum, we are seeing a consolidation area, and when the sellers break this consolidation area, again momentum repeats here. So sometimes you are seeing this type of momentum, a momentum ranging a consolidation area, and when it's break you can go again with the momentum. So you can see here this bullish momentum start here and it end here, right? So after this ranging, after breakout of this ranging with this candle, we can expect again the same momentum in the right. So we can go with sellers here. We are seeing a strong candle, we can go with sellers again. We are seeing a continuation candle, we can go with sellers again. We are seeing a strong candle, we can go with sellers, but here you will get a losing trade. But sometimes it happen in the market, a retracement candle, it is happening in the market, but always follow the momentum. It is better, even you lose, it's better to follow the momentum, and until you get any weakness, these levels are not important. Until you get very weak candle like this, the left levels are not important. So only these two levels are important until you get a very weakness and a level. Okay, until you get a very weakness and level, just these two level are important for us. So you will get a losing trade, but again a continuation sign, a inverted hammer, so again go with sellers. Again a strong candle, again go with sellers. Again a spinning top, again go, again a strong candle, again go with sellers. But now you can see it is a weakness at the level. Okay, so now we can expect a reversal. But what if this candle be a strong candle like this? You cannot expect a reversal, you can expect a breakout, and after the breakout you can expect again a reversal. Okay, so this is the psychology of the momentum. And you can see here, okay, this candle break this level, so it is, you can start trading from this level. It is 1 2 3 4 5 6 7 8 trade, and here you will lose 8 trade, 7 win, 1 loss. So 7 win, 1 loss, it is very good winning ratio, and you can follow the momentum. It will help you. The 9 candlestick in the momentum, they will help you, and you can win your trade easily. Here also we are seeing a bullish momentum start from this level and it end from this level. With this strong candle we can confirm the momentum, this momentum will repeat on the right, so we can go with sellers here. Again, we can go with sellers, but here you can see the bars made a weak bullish candle here. It is a continuation sign, so again you can go with sellers. And here you can see this candle break the level, so now you can think for a reversal, and you can see it is a buyer's candle. So it is a psychology about the momentum. When you are seeing a momentum in the left, you can expect a momentum in the right, and you can expect a reversal after the breakout of this level. You can see after the breakout a reversal, or if you see any weakness at the level like this, a weak candle, so you can think for a reversal. If you see a strong candle at the level, you cannot think for a reversal. If you see this type of candle at the level, you cannot think for a reversal. The market mostly will break the level, and after the breakout it will reverse. So this is the psychology about the momentum. When you saw three same color candle, the momentum will start. So you can use this point in the market. So this was for today class. So please practice all these points in the market, and practice is the key. Always practice, and you will get good winning ratio. So thank you. Good day.